on what the budget 2016 and Prime Minister's policy statement would mean to the industry and commerce. So we have two very brief presentations. First one from Mr. Riaz Mihullar, Managing Partner, KPMG Sri Lanka. He will take us through the highlights of the budget, just to refresh your minds, what the key points in the budgets were. Then we have Dr. Nandalal Veerasinghe, Senior Deputy Governor, joining us in the panel. Then Deshal Dimel. Mr. Deshal Dimel is Senior Economist, Haley's, as well as Director of Sambat Bank. And then we have Mr. Amal Sandaratne, Founder, CEO of Frontier Research. And we are waiting for Dr. Eteri to join us. He would like to discuss her views on budget. And then, of course, Nishan. Ready? Okay, so please welcome your panel. Put your hands together and please welcome. Okay. So I'll invite Riaz to start. Okay, and hand over to you, Nishan.
Okay, thank you, Lakshman. I'm going to just over the next 15 minutes quickly take you through the highlights of the budget and the impact of the budget on the various sectors. So it's going to be a fairly quick presentation because I'm sure you'll find the panel much more interesting. Okay. All right, so this is what I plan to cover, which is the budget overview, the concept of the simplified tax regime, which has been touted in the budget speech, the changes to indirect taxes, the new levies and charges, and the impact on key sectors. All right, what you see up there is a broad overview of the revenue and expenditure. It is expected under the budget that we will come down, small reduction in the deficit from 6%, which is expected this time, to 5.9. But with all of these deficits, we have to wait and see when it actually happens, because sometimes supplementary estimates mess up all of these things. But that's a quick look at the budget overview, the expected deficit. And the next slide tells you the expenditure allocation. You will see that there is significant increases in the education and health sector, infrastructure, and of course other goods and services. So these are some of where the monies that are going to be spent next year are going into. Of course, there is a lot of debate about how some of the numbers are worked, but I think there is a justification for the numbers. All right, let's look at the simplified tax regime. One of the things that the Honorable Minister of Finance was saying is that he wants to have a tax regime where you can have your tax return in a page. And I think with the structure that has been suggested, that can be achieved. For example, the income tax rate for individuals, companies, has basically gone into a 2-slab rate. We currently have a standard rate of 28%, but of course we have several sectors or industries which have concessional tax rates ranging from 10% to 12%, depending on whether they are education or exports, etc. And currently we have betting and gaming and liquor and tobacco at 40%. Now what the budget is proposing is that there will be 2 rates. One is what they call the higher rate, which is 30% for betting and gaming, liquor and tobacco, banking and finance, insurance, leasing and trading activities, which is a 10% reduction from the 40% tax rate that was applicable to betting, gaming and liquor. And then of course, there is an additional surcharge of 25% for tobacco, the favorites, which is the tobacco, liquor, betting and gaming. So effectively, we are going to have 2 rates. One is a 30% rate and the balance everybody else at 15% flat rate. So that's the for corporate taxes. For individuals also, there has been a significant change going from the current where you pay 4% going up to 24% with a tax-free allowance of 500 for people, and for employed people under payee, you have a 750 allowance. That has been brought up to 2.4 million. So effectively, those who get up to 200,000 rupees will not pay any pay tax. And anything above will be a flat rate of 15%. So there is no 4, 8, 12 rates. It will be a flat 15%. One of the things that this does do is it makes Sri Lanka have the lowest individual personal tax rate. I think we are below Hong Kong and Singapore as well, which have 17, 18%. So at 15%, we do get into the lowest tax rate bracket. I have been talking to some of my partners overseas, and they have been fairly impressed with the particular provisions that have been introduced. And also, I think the 2.5 million threshold is one of the highest in the region. So it's a fairly generous allowance. ESC has been increased from 0.25% to 0.5%. See, economic service charge is something like the minimum tax that is there. Earlier, if you were a loss or an exempt company, you paid 0.25%, and that could be set off from a future tax that will be payable up to a period of 5 years. Now they have increased that to 0.5, payable both for those who are having losses and but also the profitable company. Profitable company doesn't make an impact because you get set off against your taxes. But the limit for 3 years. So if you have losses and you pay ESC, the limit is only for 3 years. Beyond that, the limit, it can't be carried forward. They have removed several levies. The share transaction levy, the earlier regime, we had a STL, which was charged. And once STL was paid, capital gains and stamp duty and all the other things were exempt. So by taking STL off, there was a worry at one time, will capital gains come back but on shares, but it has been clarified that that won't happen. So basically, STL will come off. Stamp duties also will come off, so that that's the move I see as a trying to enhance the stock market. The tourism development levy has been taken off, construction guarantee, and the luxury and semi-luxury taxes we pay on motor vehicle levies have been taken out. So these are the removal of some of the levies that have been done. Changes to indirect taxes. Now this is something we need to watch. Earlier for VAT, we had export of goods and services 0, and that remains unchanged, still 0. Earlier we had a standard rate of 11%. Now there is a 2-rate system, 8% and 12.5%. So 8% is for manufacturing and import of goods will be 8%. For everybody else is 12.5%. The threshold also has been reduced to 3 million a quarter from 3.75. And I think one interesting thing will be that also the removal of VAT on wholesale and retail. So this concept of deemed VAT, which was there under the earlier provisions, will now no longer exist. NBT has been increased from 2 to 4%, and threshold also has been reduced from 3.75 to 3 million. One of the limit that was there, 25 million, was been taken out, so it will apply even for smaller companies. New levies and charges. There are some new levies. International telecom operators levy has gone up from 9 cents to 12 cents, US dollar cents. Emission levy, company registration annual fee, there is some levies. I'm not going into the detailed numbers. I'm trying to stay at a high level. Voluntary liquidation fee, changes in airline tickets. Now, every time you buy an airline ticket, there is an increase charge, $2. Fee for registration of local. There was a issue with the local assembled cars. There was a big problem where several cars were there which are not able to be registered. There is provision now that if you do it before March, you pay 1 million for a car and some 700,000 for a van. Vehicle valuation certificate, environmental fee, resident visa fee. So these are some new levies that has been introduced in the budget. Right? I'm not going into each one of them individually because that will take time. Let's look at what are the proposals that are in the budget to encourage investments. I think one of the significant ones was this the removal of land lease and restriction of land ownership on identified investments. I think this was a major problem. I know through the chamber and everybody lobbied, but there was absolutely no interest earlier of doing this. But now the lease on tax on leases have been taken out, and for land transfer, if it is for certain identified large-scale projects, the ownership can be given. But it will be not for just buying houses or land like that. It will be for this only. They also offer to provide state lands for investment in lagging regions, replacing BOI with the Agency for Development. And the important thing is that complete application process to be finished within 50 days. I think that's a useful point, that from the date you apply, within 50 days, you either get a yes or no for your approval. And I remember the minister said that if you don't, somebody asked him what happens if you don't get approval in 50 days, then the head will change, he said. So anyway, so setting up of a Colombo International Financial Center, introducing a foreign exchange management bill. I think that's a good point, because one of the things that I know people have said, trying to reform our Exchange Control Act was a virtual impossibility. So I think they're done, I think, the wise thing in just dumping the whole thing and bringing in a new, which is the foreign exchange management bill will come in, which will actually replace the Exchange Control Act that we have. There'll be an investment act which will look at granting incentives. An Exim Bank is planned to be set up. The securities SIA account, securities investment account, where it was, if you brought money through an SIA account, then you can take it back without having to go to exchange control. That has been taken out. Now you can bring it through any formal banking system. I think it couples with the fact that when you take the exchange control out, what happened when you had SIA, that circumvented the need to go to exchange control approval to send your money back, or send your investment back or your profits. But now that they're taking that out, I think the need for a separate SIA may not be relevant. This is my personal view. Removal of stamp duty on REITs and share certificates, I think, is a good move, because REITs is being talked about for quite some time. Only question I wonder is how they're going to manage the removal of stamp duty on REITs, because this may be a provincial matter, but I think they will find a way of sorting it out. Removal of income tax and withholding tax to corporate debt securities, and dividend exemption on listed shares for non-citizens and foreigners. Okay, let's look at the quick, I'm going to run through a few sectors, not all of the sectors, but main sectors, and see what the impact of this proposals are on the different sectors. One would be they have removed import duties on agricultural equipment and machinery. I think one of the things that is being thought about is try and encourage corporate farming, because that is you see, our agriculture sector is a very unorganized, informal sector, and if you're really going to make sense of this, you need to corporatize some of them. So maybe this is a move in that direction. Half tax holidays will be granted to companies that use drip irrigation, greenhouse technology, and high-yielding seeds. Qualifying payment relief for machinery used for carrying fruits and vegetables. State will provide lands, warehousing, and cold room facilities, establishment of agriculture and fishery export zones, and a concessionary interest loan scheme to fruits and vegetable growers. So these are where the proposals will impact on the agriculture sector. And let's look at the sector for SMEs. Now, this is a sector on which the budget spent a fair amount of time on. There is a big move to try and support SMEs through venture capital companies. There are a lot of concessions given to venture capital companies who provide financing to SMEs. There are some definition that needs to be done. What are venture capital companies? What are SMEs? Those, I think, we'll have to wait and see how those come out. Construction of industrial parks, because these are ways in which you can help an SME to set up and get into business quite quickly. 50% tax reduction for people who provide incubator assistance for SMEs. creating a new SME board on CSC with less stringent compliance. I'm not sure whether they will replace the SME board with the Dirisavia with this, or whether there will be still more concessions given. Because now we have a Dirisavia board, which is for smaller companies, but they're talking of a new SME board for the CSC. And supermarkets to support the SMEs to providing greater shelf space and exposure. Impact on tourism and leisure. MICE is being pushed with 50% tax holidays for 5 years. There is the removal of the tourism development levy. There is triple deductions for those who do establishment of hotel school training, because I think that's a big issue. We have a lot of hotels forming, and finding people to manage that is a big issue. So that's, I think, is a very useful proposal. Removing import duties on caravan, carriages, yachts, surfing equipment, speedboats. These are all paraphernalia that need if you're going to develop the tourist industry. Tax concessions, providing state land for establishing theme park in lagging regions, revising import duties on goods to evolve into a shopping paradise. I think what they're trying to do is to try to make this like Dubai, where people can come and shop. So electronics and certain items, they're taking some of these, reducing some of the duties to make this an attractive place for people to come and shop. And I think that's sensible, because that's with the people around us, like we have India, Pakistan, we have South Asia, Southeast Asia. This can also be used as a useful, because Dubai is proving to be too costly now, and so is Singapore. And mandatory registration of hotels with the Sri Lanka Tourism Development Authority by 1st June. Because one of the things I think is that we have lots of small boutique hotels being started, and nobody knows what's happening. The revenue leakages, all sorts of things are happening there. All right, banking and finance. This is a very controversial one. I'm sure that people talking about it. Licensed banks to cease engaging in leasing, because I think the minister's view was that banks should do banking and let leasing be done by the leasing companies. There is different views on that. But I think the main point, what may be of relevance would be, I think, there might be some move to try and get the banks to do more the banking, or even maybe leasing of equipment type of things. But motor vehicle leasing, I think, will become prerogative of the leasing companies. So increasing branch network by 15% in lagging regions with minimum 6 employees per branch. So that, maybe a move to enhance employment as well. Liberalizing the foreign exchange business subject to a license fee. Lending limits for agriculture 10%, SME, women and youth 5%. So these limits, I think for agriculture, we already had the 10%. So this is SMEs and women and youth 5%. There is the introduction of charges on cash withdrawals. An interesting one. If you withdraw 1 million and above, up to 10 million, it's 2%. Beyond 10 million, 3%. I was talking to my partners in India and Pakistan, and they have an interesting thing. What they say is their limits are lower. I think 50,000 and 100,000 in Pakistan. Whatever is deducted can be taken as a credit when you file your return. So they have a concept of filers and non-filers. So if you're a non-filer, then this tax is gone. This is like a tax source done. But if you are filing tax returns, whatever deduction from the withdrawals can be claimed as a tax credit in your return. So this they are doing it as a move to incentivize people. It's a flat off 2% and 3%. I'm sure there will be some guidance of how this is going to be done. If not, creative Sri Lankan minds will find ways of trying to overcome this. But I'm sure there will be some clearly some rules and things will come in how to take care of this. We all have heard of this, withdrawing 950,000 not to get the 1 billion limit. But I'm sure they'll find ways and means of catching people in on that. But I think the idea behind that, I think, is a good one to try and move us out of a cash economy, because I think the minister's viewpoint was that it also lends itself to corruption. So if you take it out of the cash into the banking system, not that it's going to eliminate, but the chances are minimized. So this is a quick run through. I think I have kept to my 15 minutes. I'm sure in the panel you'll have much more to discuss. Thank you.
Can we invite Deshal perhaps to the podium? Yeah. Deshal, I don't know whether you need an introduction.
No, I don't.
Okay. I think that's introduction enough, yeah. So while Deshal waits, he's a senior economist, he's a long-standing research economist that's worked in Sri Lankan think tanks as well as in the private sector and been involved in quite a lot of government policy also. So Deshal brings a strong, rounded background, and currently, because of his involvement in the private sector, I think is particularly relevant for this panel. Thank you, Deshal. Yeah.
Thank you very much, Nishan, and thanks, Lakshman, for the invitation. So despite my involvement, I'm going to give you my personal views and nothing to do with any of the companies that I work with. On the 5th of November, we had a slightly odd development where we had prior to the budget, the Prime Minister gave a vision for the economic outlook and the economic strategy for the country. As something that we don't always have prior to the budget, so it was an interesting kind of new step, and I think it was much needed because ever since the new government came into power or the new president came into power in January, there was a lot of uncertainty among private enterprise as to what the direction of economic policy is, what kind of strategies the government would take. And then again, after the general election in August as well, there was still a lot of unanswered questions. So it was good that we had this kind of outlining of the medium to longer term economic strategy of the government. So what I thought I'd do is I just picked on 3 issues that I thought were interesting. It was a 7,000 word speech, so there was a lot of other things that came up as well. But I think on balance, I would say that as a summary, the vision was positive in that it articulated a number of necessary reforms in order to take Sri Lanka into a longer term sustainable growth path in a few different areas. I will pick on 3 of those. But at the same time, of course, we all know that the devil is in the details and the capability of implementation. So the other thing I want to do is also to talk a little bit about where the subsequent budget presentation on the 20th of November, where that was in line with some of the PM's recommendations and where it was slightly divergent, and to look at how that would have a short-term and or a long-term implication. So just the 3 points that I wanted to pick up on. The first was the PM's vision that Sri Lanka ought to become a more outwardly oriented economy. Actually, he starts his speech by talking about how during Parakram Bahu's time, Sri Lanka was a major trading hub in the region, trading heavily with India, with Myanmar, and so on, and how in recent years we've become a lot more internal oriented, with exports as a percentage of GDP, regularly quoted figure coming down significantly over the last 2 decades. So there was a clear articulation of the fact that we need to move back to our kind of external focus, which again makes sense because we are a 20 million population with a $75 billion market, it's not going to be sustainable to grow purely on the back of that. It is necessary that we need to look at the exports of both goods and services in order to be able to create the industries of scale and the services of scale that will enable sustained growth. So it's a positive overall thing. And a number of sub-points were also mentioned, things like looking at a favorable exchange rate to support the outward orientation of the economy. So that one would read as being a more flexible exchange rate. Again, if you look at the implementation of this, it has been yes and no. The rupee was allowed to float a couple of months ago, but even after the floating, there's been a significant amount of selling of US dollars by the central bank in order to maintain a certain degree of value of the rupee. So it has not been implemented fully, but it has. There's been again a positive movement towards that direction. There was mention of looking to have greater engagement in trade agreements. A number of countries are mentioned: India, China, I think ASEAN, and of course TPP as well. Again, here, what is going to be crucial is the way that we actually engage and the way that we are able to implement these. We know that we've had, in our past experience with trade agreements, there have been positives and negatives. It's important to look at things like mutual agreements on standards, customs procedures, and so on, to ensure that you're able to make full advantage of these agreements as well. Things like TPP are, again, a lot more complicated. You get things like intellectual property rights that come in, and a lot more difficult to implement, particularly from a domestic economic policy front. So again, the sentiment is good, but we'll have to see how far we can get on that in terms of implementation. Linking with global value chains, again, something you're seeing a trend that has been brought a lot of success to countries in the ASEAN region, where particularly in the manufacture of electronics, they've seen a lot of slicing of the value chain, producing different components of electronic equipment in different countries, depending on their relative comparative advantages. So to see how we can link up with that kind of thing as well. Again, there are difficulties in doing that, which I'll touch on in a couple of minutes. Export-oriented FDI, again, I think that is a crucial thing that we need to look at, particularly if we want to overcome some of the barriers that we would face in terms of access to technology, access to distribution networks and markets, and so on in target countries. Export-oriented FDI is something that you can really leapfrog some of the issues that we would otherwise face. So again, that is a very important, I think, a very important direction. And again, it's something that there has also been, it has been supplemented by certain indications on desires to improve the ease of doing business and so on, to facilitate that as well. So again, positive directions overall, and also using Sri Lanka's location to provide services to the region. Again, something that's much needed, and it was also touted in the previous regime as well. But okay, in order to be able to be a successful export-oriented economy, you need to be competitive. I think this is where we are going to face the more tricky political economy challenges, because that also necessarily entails that being open to more competition. So that is both internally and externally. So what happens when you have greater, say, import liberalization is that you're going to create disruptions in your domestic markets. There could be losses of livelihoods and so on, which will necessarily be faced by political opposition. Now, even though we have a national government which has got a significant amount of say, parliamentary cohesion as of now, it's also important to remember that the different parties involved are ideologically very divergent. So there are very opposing views on a number of these issues that we will talk about today. And in things like, for instance, trade liberalization, you're going to find a lot of loggerheads and a lot of difficulty in pushing through some of the tougher reforms that you'll find going forward. Education is another crucial area that is needed to support this kind of outward orientation of the economy, particularly with regard to creating a labor force that has got the skills and the capabilities to provide the goods and services that will be competitive in a global market. As we all know, Sri Lanka is not a cheap destination to manufacture. So therefore, it's important that we're able to produce things of a high level of quality. And to do that, you need to have a very capable workforce. Now, in the budget as well, there are commitments to enhance spending on education. But what is important is not the amount of money that is thrown, but what it is spent on. So things like curricular revision, teacher training, those are the areas that really need to be addressed in order to change the education system overall. And that's, again, not going to happen overnight. These are going to be longer-term developments that will take effect and have an impact on the economy only a few years down the line. And also with regard to the exchange rate as well, that's another politically tricky issue, because you know that the cost of living is one of the things that is always considered as a key in terms of voter balance and so on. As soon as your exchange rate starts depreciating, good for exporters, but it starts hammering you on your consumer prices and so on. So always those are things that are debated quite a bit before implementation. The other interesting, the other important thing that the PM touched on was the issue of state sector reform. Now, we know that Sri Lanka has a very large involvement of the state in the economy. We have about a 1.3 to 1.4 million strong public sector workforce. We have 245 state-owned enterprises and a number of other ways in which the government plays a significant role in the economy. Now, there are two interesting quotes that I picked up from the PM's speech, where he says that since the days of the Second World War, we have lived with the false notion that the government must somehow intervene in the economic process. And we cannot sustain the belief that the government must provide all services and solutions. So that is, I think, quite an interesting and I think an important comment and a strong comment to make. But again, to actually do this is politically quite tough. But there were also some interesting follow-ups in the budget as well. There was reference in the budget to encouragement of public-private partnerships, to allow greater role of the private sector in some of the government's future activities in infrastructure development, housing development, and so on. Also, there was reference to the divestiture of certain non-strategic state enterprises. Not a lot of them, but I think a few of them were mentioned, and already some of the wheels are in motion for that. And in terms of, again, state-owned enterprises, creating a Temasek-style holding company to manage some of these state-owned enterprises. But this is going to be very tricky because, again, as I was saying, that ideological divergence between the two elements of the national government, they are very strong on things like the role of the state in the economy. The SLFP has traditionally been a party that favors a strong role of the state and a strong government, and the UNP has traditionally been a party that looks more at a smaller government. And even though the UNP is evolving, they're still looking, I think, at those roots are still quite prevalent. So how these two power dynamics are going to face each other is going to be crucial to see the extent to which the PM's vision can actually be implemented with regard to the role of the state in the economy. I think it will be very difficult to cut back on the number of employees of the state. The 1.3 million plus figure, I think that is going to be quite sticky. Even in terms of state-owned enterprises, even though they might divest a few non-strategic ones, there will still be a large number of a significant body of state enterprises, and the state companies dominate certain sectors. So for instance, like even in the banking sector, about 40% of assets are held by the state banks. In energy, for instance, the state is still a very significant player. And the issue that a lot of, say, private enterprise faces is that you're competing for limited resources with the state machinery. I think a lot of companies might face the issue where people leave private sector jobs and join the state sector because of perceived benefits in terms of your job stability, in terms of pension, and so on. So it is actually a trade-off in terms of what the private sector can get and what the government sector can get when you have a large state sector in the economy. But if you look at issues like state-owned enterprises, we don't even need to talk, even before going to the politically contentious issue of ownership about privatization and so on. Even then, you can do a lot to improve efficiency of state enterprises and also state public services by creating a culture of accountability. And so this has to be done by creating transparent, measurable performance criteria and ensuring that the officers in those institutions are actually held accountable to meeting those standards. And that is one thing that can really make a significant difference. Whether the holding company style operation is going to achieve that is a different question. But I think if they can do that, then that is a step towards the right direction in that sense as well. One, I would say, a negative was the fact that the budget continued the past practice of the government being involved in setting prices. And this was done in a number of different areas. It's gone into some interesting things like hoppers and milk tea and stuff. But what happens is it basically creates inefficient and wasteful use of resources, and also it creates poor quality in some cases. But you basically end up tying up resources in areas where we may not necessarily be competitive by ensuring minimum prices and so on. You're basically not allowing the market system to work in the way that the market system ought to. And again, this I think is somewhat at odds with what the PM sentiments were. So it's something that hopefully will change going forward, particularly when you have the digitalization of the economy that will enable us to do things like targeted cash transfers to the needy instead of having economy-wide interventions such as price interventions of this nature. The last thing, the last thing I want to talk about in terms of what the PM said was his emphasis on fiscal reform. He wrote about the necessity of revenue enhancement. It's a subject that we've all been very familiar with in recent years. The fact that Sri Lanka's government revenue has been coming down as a percentage of GDP, and a lot of measures have been suggested of how to improve that, and with a view basically to creating greater fiscal sustainability going forward, which would in turn have a positive impact on the economy by creating better macroeconomic stability. The PM also mentioned that the government would be looking at a more equitable tax structure, where shifting away from the current system where we have 80% indirect regressive taxes and 20% direct taxes, to one where we have a 60-40 ratio, which is much more favorable from an equity standpoint. So those are the two important takeaways, I think, on fiscal reform. But if you look at the budget, I think some of those expectations were not met. If you look at, for example, in terms of revenue, there's an estimate that there'll be about a 38.5% growth in revenue in 2016 compared to this year, which I would say is quite optimistic, and it's unlikely that it would manifest unless because most of the revenue measures don't really justify that level of increase in revenue. There's certain increase that can be justified, but to expect 38.5% growth is unlikely. So we will have one of two situations: one where we have a significantly higher budget deficit than we are anticipating, or the government will be forced to cut back on its capital expenditure proposals. And I think the latter situation is the more likely one, where they would manage the budget deficit by cutting back on your capex. But then there again, that capital expenditure is really what is important to invest in the future and to create, particularly in areas like education and health, where you need to be able to create opportunities for future growth. There is also in the budget a lower emphasis on direct taxes and a great emphasis on indirect taxes, which is again at odds with what the PM statement has said. But on the upside that I see is the emphasis in the budget on the digitalization of the economy. And this is again something that I think can, in the longer term, really be the solution towards enhancing Sri Lanka's revenue collection, because I don't think the problem is in the rates per se, but it's in the collection. So with digitalization, if we are able to improve the revenue collection, the administration side of things, and then enhance prevent your leakages of taxes, I think that really is the way forward. My concern, which I'm sure Amal will talk about in greater detail, is the fact that these are long-term solutions. But in the short term, we have got significant fiscal risks that could be developing, particularly if we don't hit the revenue targets that we are envisaging, which could result in a significantly higher budget deficit that is anticipated. And that creates important short-term risks, which I think what really needs to be looked at quite urgently right now to ensure that 2016 is a relatively smooth year. Okay, let me end there. Thanks. Look forward to your questions.
I think I'm going to take over moderating the discussion, and I'm going to try and keep my opinion out of things, but I will say when I insert it, okay? I think we've had the chance to listen to two very good and different presentations on the budget, as well as the Prime Minister's policy statement. And Reyaz Mihula and Dashal Dimel have done the presentations. I want to create an opportunity for others on the panel to speak for maybe just 3 minutes of, 3 to 5 minutes, explaining some, their first reactions or something that they feel is important that they have taken away from the budget and the Prime Minister's policy statement. Let me begin by introducing others on the panel. Immediately to my right, we have Eteri Kavintadse, who's the IMF's resident representative, very difficult name to say, but we will call her Eteri, IMF resident representative in Sri Lanka. We have Amal Sandaratna, who is the CEO and founder of Frontier Research in Sri Lanka. And we have Dr. Nandalal Veerasinghe, who's the Deputy Governor of the Central Bank. So thank you very much for being on the panel. I will start with Eteri and ask her to share her thoughts on the budget from a macroeconomic perspective, really on the policies, and then give Amal and Dr. Nandalal Veerasinghe the same opportunity. Eteri, the floor is yours. Yeah.
Thank you very much for an introduction, and thank you for very interesting presentations. I think, as Desha said, it's an inspirational and aspirational budget in many respects, but devil is in details. And our job, I think, in this panel is to understand those details and understand how implementable this budget is and what's going to be macroeconomic implications of this budget. At the same time, I want to mention that this budget, in many respects, it's also a historic budget, and it was one of the most anticipated documents probably for past 18 months to 2 years, because This is a document that sets economic parameters for next year or maybe year after that. And that's something that was highly anticipated after a political transition by private sector, by investors, by general public, et cetera, et cetera. At the same time, it's also a very exciting document because it provides a lot of policy statements and a lot of new policy directions touching almost every sector and probably every individual. So it explains probably length of the document and hours that were spent delivering it. But let me focus your attention on macro implications. I think one important aspect that I was looking in Shah's presentation in reconciling Prime Minister's statement with the budget was the directions that he has given in terms of fiscal consolidation, where he said that he anticipates that budget deficit will consolidate to 3.5% by 2020. Now, why that number is so important and why we are emphasizing fiscal consolidation? It's important because Sri Lanka carries high levels of debt. And it carries high levels of debt because that's how history went. There was a big war for a very long time, and there was a reconstruction drive, which was mainly debt financed. As a result, we have high levels of debt. And we have to live with that, but at the same time, we have to be able to manage it so it does not become a constraint for future inclusive growth and social development. This motivates drive for fiscal consolidation because you have to be able to bring your budget deficits down so your debt levels come down and you have more space to finance your social and inclusive growth. Now, future attempts of fiscal consolidation were mainly done by expenditure compression. And quality of those consolidations were not that good because it did not emphasize revenue generation. Because there is no sustainable way to address your debt situation without addressing your revenue situation. Because being able to generate your own revenues and being able to meet your own spending needs reduces your need to borrow. That's why these two aspects, fiscal consolidation and gradual reduction of budget deficit and increasing revenue generation capacity, is a railroad that will bring you to fiscal and macroeconomic stability. Now, on both of these fronts, we had very good sense of directions that Prime Minister gave, but looking and reading into the budget, we see that it does not propose fiscal consolidation in 2016. And in fact, 2015 budget deficit turned out much higher than planned, which is 6% instead of 4.4%. But somehow it escapes discussions. We could talk maybe later on about approach to credibility of the budget. Second thing is revenue generation. Now, as Shah mentioned, if you look line by line, you see that all of the main tax lines are going down in Ministry of Finance own estimates, and then tax revenue is yet projected to increase by 40%, and most of its increase comes from non-tax revenue, which increases by 300%. And that 300% increase is not really explained. So if you are trying to map numbers to policy statements, it's very hard to understand what drives that revenue increase. Correspondingly, expenditure increase is also quite ambitious. I don't want to discuss expenditure portfolio, but it results at the end of the bottom line of expanding budget deficit. So even if this budget is fully implementing, question comes to what it means to finance this larger deficit. It means that you will be borrowing more. It means that you will be accumulating your debt, and it means that your overall debt level is going to be increasing. Now, what it means from investment point of view, it signals outside world that you are finding your way through your development by borrowing, and with already high levels of debt, you are not addressing that fiscal vulnerability. And it raises a lot of questions in terms of pricing risk, how investors approach Sri Lanka as an economy, how you rank against other Asian economies. One important aspect that I want to also touch upon is how you evaluate your budget. I think it's very important that there is a public debate about implementation of budgets, and there are oversight mechanisms that question, for example, why 2015 budget target of 4.4% of GDP deficit has not been achieved. What are the lessons that we could draw from that, and how do we correct that? It's a very important debate, because when revenues do not materialize, and if they do not materialize, authorities will be bound to cut spending or run higher budget deficits, and none of this is good. If they cut spending, that effectively you have unlimited room of discretion deciding which lines you are going to allocate your limited resources. And this should be subject of public debate and public approval. This is something that needs to be approved by the parliament and then monitored into implementation. That's why realism and implementability of budget is extremely important, because it empowers public oversight over public resources. I think second important aspect that needs more attention is tax expenditures. Now, what we mean by tax expenditures, those are tax holidays, rate reductions, tax exemptions. Those need to be quantified and presented for the public debate, so people understand what are the leakages in tax revenues which are used to incentivize certain economic activities, and debate, is this something that we want to channel public resources, or there are more efficient way to decide that? I think one small comment I want to also make on Disha's statement on digitalization and emphasizing that digitalization will help revenue collection. Yes, it may help revenue collection, but problem is in excessive number of exemptions, holidays, and rate reductions. I don't know how you could digitalize your direct tax code when it has 200 different provisions. Like if I am a programmer and I want to create a program, I don't know how I would be doing it, or I would need to hire like lawyer, accountant, and probably technician to be able to file my tax return, which may effectively increase my tax filing costs and reduce it. So it brings home the point that you need to look on your tax legislation to clean it up and then digitalize it so it's implementable. And in that regard, statement in the budget that authorities are willing to look on the tax legislation from simplification point of view, I think is the right sequence to approach things. So you create an environment where digitalization and easing of tax payment is enabled rather than going other way around it. I probably exceeded my 4 minutes, but there was a lot to say.
That is very helpful. And I thought Ashri raised very interesting points that are going to create a lot of follow-up questions for, I think, both Deshal and Dr. Nandalal Veerasinghe. But I'll pass the mic on to Amal Sandaratna to share his thoughts before we continue. Yeah.
Okay. Thank you very much for this opportunity and for the introduction. So let me try to give you my feelings about the budget in particular and also the policy statement that preceded it. But I'm going to try to give it in non-economic terms, try to make it very simple. and kind of bring it into what I mean, I do this sometimes. It's not exactly the same thing, but what I call it a corporate context of where we are. So, I mean, as everyone has acknowledged, it's a country with high debt, dramatically higher repayment schedule, more than the total level of debt. And unlike many of the other speakers, I tend to worry a lot more the long term. The long term, you know, can make a lot of projections, but look, we got to deal with 2016. That comes first. What are we going to do about 2016 as opposed to 5 years, 10 years in the future? So I that tends to be my focus, figure out a little bit more on the short term. So we are a country where rather than the overall debt levels, our debt repayments, which are coming due, have dramatically increased because of the debts taken on in the past. But compared to like 4 years ago, it's, I mean, our external debt repayments are probably 4 times what it used to be. Our level of reserves relative to these repayments are the metric, the external vulnerability index is one of the worst in the world. So that is the context you're coming in. And I mean, I don't now sometimes when I talk to audiences, if I was presenting, I don't sometimes need to even show the numbers or the charts, because you find key politicians within the government also often in acknowledging the kind of economy they have even in the private knowledge the process. So corporate context, we are a country with debt repayment issues, high levels of debt. So what do? It's sort of like a new corporate management team has come into power to deal with this economy or this company, which has a lot of issues. And then in that context is where I look at the policy statement and the budget. What I see, I mean, is, as everyone said, a lot of good ideas, some bad ideas, where if they do implement the good ideas, can make a lot of differences. But a lot of them feel very long term to me, that will deal with problems and solutions for the long term. What about next year? And that's where the whole concept of this fiscal deficit is. This deficit is as high as it was earlier, even on the numbers given, pretty much. And if, I mean, like we said, the revenues are higher than seems reasonable in the projections, you're probably going to run with a deficit much higher. And this is in a context that next year, the available financing is less. So like I said, bring it back to a corporate context, management team has taken over and come up, give them the benefit of the doubt with a good long-term plan. 5-10 years down the road, the investments in education, training, whatever is going to pay off. But what about this year, 2016? What are they going to do? There is no difference to the operating losses, so to speak, or the negative cash flow this company, in this case, the economy, is facing. How are the lenders going to feel about it? And that's where the biggest risks fall, because unlike earlier, when we got into these problems, the situations, every time, as Nishant said, when the sarong got a bit loose, we are far more vulnerable to external forces, rating agencies, international investors who have pulled a lot of money out of Sri Lanka, and not necessarily only our fault, because a lot of money is getting pulled out of emerging markets, but that is a factor to keep in mind. And again, it's good the Prime Minister, and post the budget, in the recent statement he made, I think a couple of days ago, talked about the external risks. So it's like with your sarong a little bit like loose, there's a lot of wind, and you have these external parties that have been holding it up who can kind of pull it away. Okay, that's kind of the situation. So this is the, so the question is, those external parties, rating agencies, foreign investors, how do they look at this? And that's very important, because they are actually funding us. When we try to raise more money with sovereign bonds, all these things matter. The money that's coming to T-bill and T-bond markets. How are they going to look at a situation where you are running the same level of losses as it used to be, but promising that in the future we'll get it down and we have good policies and things will be better 5 years, 10 years in the future? Are they going to take it as credible and be willing to keep funding in a much tougher global environment for 2016? Is that going to be good enough? And that's why I say, bring it to a corporate context. You have to restructure a company in trouble. Are you going to just accept a long-term promise, or do you want some tough actions taken now? So that's the kind of question I sort of leave with you. And that's why I am actually quite worried about the economic situation for 2016. Whatever happens in the long term, whether these long-term ideas work or not, 2016, the question is it credible? And that's where the whole concept of deficit is. And you've seen the rating agencies starting to, in their kind of language saying they are not very happy. And you see even the more positive international banks who are writing reports on the economy, post the budget, they were the kind of more optimists. You could see that their tone has changed. And here, that's where the deficit comes in. And that is a very significant worry that fiscal consolidation is not coming. And these lenders, the people holding up our sarang might get a bit worried, and it can be a little bit difficult. So I leave you with that.
Okay, so we're going to move on. I'm going to ask the audience to promptly, delete that sarang image from your minds, okay? So we can continue with the discussion. Thank you, Dr. Nandalal Veerasinghe. I think you have a lot to respond to today. And thank you very much for taking the time and the trouble to be here with us. And we'll give you the floor initially to share your thoughts. Yeah.
Thank you. First of all, thank you for inviting me here. I think like last year, I am here again this year. First of all, I have to tell here, I'm not here to defend the budget because I'm the central banker. I'm here to defend whatever we are doing as central banker. So for the budget and the Prime Minister's statement, we have our own independent views, and we already express and we give it openly and also internally. Let me just start with Amal raised a very important point. Whether this, to me also, looking at some long-term really good measures that Prime Minister mentioned in his statement, visionary statement, a lot of good things were mentioned there. And then what we expected in the budget was that the kind of mechanism to move towards that direction and then have a clear workable plan to go towards those targets on a gradual basis by 2020. In fact, if you compare those two statements, I don't see, a lot of speakers here mentioned the fact that they are not really consistent in terms of what Prime Minister mentioned in his visionary statement, and then what are the mechanisms to go through that line and achieve what has been mentioned there. First, let me start with the fiscal consolidation I already talked about. One of even the previous governments, one of the mistake I think they also did when it comes to taxes, they rely more on the expanding the tax base with the expectation of more people are coming into the tax set, and so tax collection would be larger, and they brought down the tax rates. This is what they did in 2011, and then after 2011, tax rates were simplified, brought down, but results were disappointing even after 3, 4, 5 years. Now this budget has done the same thing with the expectation of results will be much more ambitious within 1 year. So this is the issue, I think. To me, if all our taxpayers here and all Sri Lankan people, if they were not able to pay more taxes, even after bringing down taxes back in 2011, after 4, 5 years, how come they pay 40% more taxes within 1 year after bringing down and especially personal taxes, corporate taxes, plus removal of wholesale and retail out of the VAT net, instead of one VAT rate having three VAT rates. So for that to happen realistically, I think I have a lot of sympathy towards the guys, my colleagues at the Treasury. As Finance Minister, Honourable Minister already mentioned, if they can't deliver, they will be sacked. So I think there are a lot of challenges for these guys who have the responsibility to implementing and delivering the revenue targets, expenditure targets, and how that can happen is going to be to me, is a very challenging task to deliver the numbers that has been incorporated in this budget. Especially revenue, even the expenditure, if you look at the public investment, 800 billion investment, do the government has a administrative mechanism to spend that amount of money within 12 months period? So even last 2015, the 4.4% budget deficit ended up uh, going to end up at 6% of GDP, 1.5% slippage, even with additional one-off taxes coming and also lower public investment. And in 2016, what we expect here is to have a lot more revenue collections, even without one-off taxes. And then all technology, all the new measures will have to kick in from 1st of January, and there will be a revolutionary approach in people should be coming and willing to pay more taxes, 300 billion more within a 12 months period than what they have been paying. If that's going to happen, in fact, I'm concerned that will be a very tight fiscal policy. If people are going to pay 300 billion more taxes than they paid last year, it will be fiscal tightening. Anyway, this expenditure is not going to happen. The public investment, recurrent will be there because there's already the public sector wages, salaries, pensions, subsidies, everything has been increased and then have been increased. So there's very limited space in the recurrent account. And although it says 0.7% of revenue surplus, and hopefully, I mean, if that can deliver, that's good. I think my concern is that if that is not delivered, we'll end up in a much more worse situation in 2016, which means the government will have to borrow more. So that is a challenge. Even now, they talk about the debt service payment is whether it's going to be too high and cost of borrowings is going to be too high. It's already high from 5.9%. If that's going to be higher, then the financing, based on the estimates, there's a large amount of financing going to come from the non-bank financing sector, not from the banks even. That's a good for monetary policy. If the government is going to borrow less from the banking sector, that's good for the monetary policy. For us, it's easier for us to implement the monetary policy and maintain interest rates. But do we have resources in the non-bank sector to finance this kind of budget deficit, as even in this number? That's a challenge. And if that is going to be the case, then interest rates will have to go up because the government will have to, or the private sector will have to, crowd out. So these are the challenges. And then we look at the external borrowings. So external also now there's a lot of external borrowings coming up, and already for next year there's a requirement of 1.5 billion commercial financing coming from the markets. I can remember in the last year forum, these concerns were raised, especially the Nishan very excellent prediction that he made was that based on some analysis, Sri Lanka's risk premium was going to be increased. He made the prediction last year. In fact, now we are having a highest risk premium this year. So he was right. Our risk premium was rising and it has also risen. And if the deficit is going to be more, and if the government will have to go to the international markets, so what kind of risk premium we have to pay? So would that reflect the investors' perception on Sri Lanka, investors' willingness to invest in Sri Lanka? Has it already improved or worsened this year? And from this point, I would like to pose this question to Nishan. What is your view, based on your analysis, what's going to be the risk premium for the next year and going forward, based on the investors' viewpoint, looking at the budget? So I think I appreciate his comment on that regard. So these are the concerns that we have on the overall macro side. And apart from that, if you look at the banking sector, the finance, I just mention a couple of things. One is the 100% deposit guarantee to the finance companies. Now, finance companies are going to have a deposit of about 500 billion rupees. So we central bank have the capital all about 80 billion. So who is going to take the liability? So isn't there going to be a moral hazard issue where central bank is supposed to give a 100% guarantee to finance companies of 500 billion deposits? Then if people believe that, a lot of commercial bank deposits will be moving into finance sector, and there are certain weak companies, there's a moral hazard issue. They can do whatever they want because back on the government guarantee. And then who's going to pay the liability? Obviously, central bank would not have the capacity because we have a limited capital, and this government will have to come in and rescue or bail out the central bank if that is the case. There's are concerns. And the leasing business, taking out of the leasing business from the finance companies. Who is going to finance the large kind of corporate customers leasing requirement? Can the finance companies finance this? The big leasing. Who is going to pay high cost for leasing? It's good for the business. And also the tax on the deposits, withdrawal. Riaz made a very nice point. If at least if that can be claimed back, and that would be a nice thing. Otherwise, who would want to pay some taxes for taking my own money out of the bank? And these are kind of issues. I think at some point, if you want to move forward and in the right direction, as Prime Minister mentioned, we have to change certain things. Hopefully, I have seen already there's a willingness and pragmatism about that. Already there are some changes that, unfortunately, that has come from the part of political pressures, vehicle permits to the public servants. I think that's a right decision that was withdrawn. But again, now it's coming back. So likewise, we have seen the willingness to do right things and changes. That's a good part of the process that I have seen. Hopefully that will continue, and all changes will come in the good part as well. Let me stop from there then.
Thank you very much, Dr. Nandalal Veerasinghe. That was really great comments. I think, yeah, thank you. So thanks to all the panel. I think Eteri started off by saying that this was a highly anticipated budget, that everybody was waiting to see what would be said in the budget. There was a sense of a significant change in the political and policy environment in Sri Lanka, and everybody wanted to know what the difference was going to be. But there's also a saying that says, the more things change, the more they remain the same. So the questions actually that was raised by many of the panelists are asking the question, did they change, or, are they pretty much the same as they were before? Now, at least one person's written in to suggest that at least one thing has changed. They say, good to hear a central banker speak openly. So some things have changed, okay? But maybe some things also have remained the same. So let me start exploring. Since there are so many really interesting questions and you're going to throw out more, I'm going to ask each speaker to limit their response to 2 minutes or under. And I'm going to just stop you if you're continuing. You can come back and speak again, okay? Let's come to this question. Deshal, you presented a somewhat optimistic view that yes, not everything is hunky-dory, but it's kind of sort of in the positive direction. That fiscal consolidation is planned, and there is some movement towards it. But then Eteri said, there's a problem. We expected it to be 4.4. It looks like even 6%. The numbers are not really credible. We can't map things to the policy statement. Amal said, next year looks exactly like last year, perhaps even worse. And Dr. Nandalal Veerasinghe says, look, there's so many problems in this fiscal consolidation, expectations and projections. So, there's this children's song that says, Fuzzy Wuzzy was a bear, Fuzzy Wuzzy had no hair. Fuzzy Wuzzy wasn't very fuzzy, was he? Okay, so is there fiscal this fiscal consolidation budget, is there fiscal consolidation in it, or is there not? Okay.
I think the PM statement says that he'd like to see fiscal consolidation going forward, but no, there was actually if you look at, say, for instance, the revenue proposals, there was very little concrete that can really justify the kind of expectations of revenue growth that are entailed. So no, but what I would expect to happen, as I said when I spoke as well, is that I don't think they'll allow the budget deficit to go completely off the charts, but what they will be compelled to do is to cut back on their capital expenditure. So all of the nice things that they've spoken about in terms of investing more on social services, education, health, etc., I think those are the ones that are likely to find getting suffering as a result of the inability to generate the revenue to meet your requirements. Because if you look at existing government revenue, almost the entirety of it is expended on your salaries and wages, interest payments, and your transfers on things like subsidies and so on. So you're kind of stuck in a bind. I think the trickier part looking at next year is that, I mean, what Amal alluded to as well, the ability to raise your cash from offshore sources. If we don't strike a balance between domestic financing and foreign financing in a sensible manner, we'll have the risk of either your interest rates domestically spiking, that's going to choke your investment and your consumption as well, that's going to hurt economic growth, or if you can't, and
Disha, are you just being polite? Is there fiscal consolidation, or is this a failure?
I'm being polite, of course. I'm very polite. Okay. But yeah, I think we can all read into that. I mean, you can see it quite clearly that the revenue is the key, and that there is not enough justification of where your revenue growth is going to come from to meet this. So as it stands, 2016, we are going to I think we are going to struggle to meet our expectations.
Okay. Is there anybody who wants to add to that? And I'll give you only 1 minute. Is it Amal or is it Eteri? Yes, Eteri. Go ahead. Maybe pass that and pass the other mic around to Disha. Yeah.
Well, I think budget numbers tell us there's not going to be fiscal consolidation. So that's what Ministry of Finance estimates itself. I think questions that we are discussing now is how implementable is budget going to be, and is it going to be carrying the risk of higher budget deficits than it's even projecting, and how credible future path of fiscal consolidation going to be. Because if you do simple arithmetic, okay, you have written off 2015 as a transition year, you anticipated 2016 as a reset year, but it still carries fiscal expansion, then to reach Prime Minister's goal of 3.5%, you have to be doing fiscal consolidation of almost 1 percentage point starting 2017. And well, it's going to be very difficult if you're going to go through that path, because consolidations of that size could be quite painful. It's easier to start gradually and build up than do some things that could be quite painful. And that's something that resonates with having a short-term vision and long-term vision. I think is you have to set the goals that's like 2-3 years away and then gradually build up to that, because there is no way around fixing your revenue situation in 1 year. You can't do it because it requires significant overhaul of legal and implementation systems, which need to be addressed through new laws, new regulations, digitalization, new operational framework. So you could announce it, but you have to be able to lay the roadmap and concrete sequenced actions, how you are going to get there. And I think that's what's missing, like not going from one budget to another budget, but setting a 2-3 year vision with a concrete achievable results and building gradually towards that. And I think I don't want to give my interpretations, but that's effectively what Prime Minister signaled. He set medium-term goals, which he thought that need to be there as macro operating framework.
Thank you very much, Eteri. I'm going to bring Amal into the picture because, he called it straight up. He said, John Maynard Keynes, when he came up with a brand new economic theory, that all dealt with the short term, and people said, so Mr. Keynes, what about the long term? And he said, well, in the long term, we are all dead. And Amal said, I don't care what happens, 5 years from today, show me the results in 2016. Amal, given that, this is the prognosis, so you're looking at a situation where in the short term, your call about not enough improvement seems to be, borne out by the other speakers also. what do you suggest? How should business respond? How should, what is the response to that kind of situation that you would provide? There's another mic down there also, yeah.
Imbalance now. Exchange rate, interest rates, fiscal. Ideally, if you don't want pressure in all these areas, in one particular area, you let everything sort of adjust rather than let one sector or one segment. For example, if you let the entire pressure of the adjustment be taken by the exchange rate, clearly there are going to be inflation impacts. I think broader macro point of view was the hope that there'll be, in line with the longer term fiscal consolidation, there will be some attempt to, tighten things up in the budget. So now clearly the budget doesn't look, even indirectionally it's 5.9. We did our own, our own projections are it's closer to 6.7% or something like that. So we are going the other way with the budget. It's unlikely. End of the day, we have to make a call. And in our assumptions, we are going to be going the other way on the budget. So then the entire pressure is going to be spent on either the exchange or on interest rates or both. So if you want me to tell you what we would be telling people about what to be ready for next year, be ready for some pretty sharp increases in the exchange rate or interest rate or both together. That would be our view in terms of being ready next year. There's going to, somewhere down the line, something's got to give. Even the IMF's advice was you need to start looking at tightening your monetary policy as well. And I think the central bank will have to look, is this looking achievable? And look, if the fiscal is not going to do this, and to deal with it, or just let the exchange rate do the full burden of adjustment, and squeeze.
Amal, if I can intervene, now some might argue that exchange rate already has done a significant adjustment. Why are you interpreting that as? Why are you not interpreting it that way?
We keep looking at the exchange rate against the US dollar. We had to understand that what we've done is pretty much what a lot of emerging countries that do the same exports. I don't think there's been any real exchange rate adjustment when you look at other currencies. It's been, yes, it's good. I'm actually, in terms of exchange rate policy, post liberalization I'm quite happy about that. Because I think, okay, they're still intervening, but I think the level of intervention is a lot more. And I think the direction of letting the exchange rate move, I think it's a good thing. The government has, or the central bank has, I think, let the exchange rate go a lot earlier. Earlier they used to hold it for a lot longer. But I think, especially with this budget, the signals given with it, I think there is could be a lot more to go, unless, of course, they tighten on the fiscal, on the monetary side.
Okay. Now, Desha, maybe you can also add your thoughts to this thing of what do we do in this context. After that, Reyes, I'm going to come to you and not ask you to talk not just about fiscal consolidation, but tax consolidation, because that was your area of discussion, and to see whether Fuzzy Wuzzy's problem applies there as well. Okay? Yeah.
Yeah, so no, I agree with Amal. I think it's hard to say what exactly the government would choose in terms of which variable that they're going to allow the burden to happen on. But I think necessarily you're going to see interest rates increasing and I'm guessing that you'd see the market rates going up and the central bank probably following, rather than the central bank making the first move on that call. But I think if you're looking at already, you've seen treasuries have been increasing. PLR has gone up by about 120 basis points so far in 2015, and I expect more of that next year as well. I think the key is for to watch out what will happen on, say, for example, the external front. We still have about $300 billion worth of foreign investments in local government securities. And that is something that has eroded quite steadily during the past 12 months. And with US action on rates expected next week, whether you will see further erosion on that side or to what extent that has been priced in. I think that is one thing that I would look out for. And another data point that is interesting is the real effective exchange rate. Now, that is something that the central bank publishes, and that gives an indication of what Amal referred to as well. It looks at how the Sri Lankan rupee is compared to the basket of the countries that we trade with most regularly. So that is still quite relatively elevated. It has come down a little bit off the highs that it was prior to the adjustment, but it's still elevated compared to what it could be. So I would agree again that there is room for for in what anticipates, but I still think that there's room for further adjustment on both.
Super. Thank you, Dashal. I just want you to know that I'm taking questions from the floor, and the question to Amal was really a question from the floor, Amal, that I just converted as my question. So thank you, Dashal, for that. There's another question, Amal, that's supposed to be directed at you, but it's really saying, will the IMF come to our rescue? You know, I'm not going to take that question. Ether is here. It's unfair. You can't lead the witness, right? So we park that. We'll see. That's right. Reyes, is there tax concern? Is the tax structure being simplified? Is it going in the direction that it says it's going, or does the fiscal consolidation problem apply there as well?
Okay. Before I get to that, I just want, as a non-economist, I just want to say one point.
Yeah.
You know, we are talking a lot about the government must do this, government must do that. But only thing is, sometimes we ask us or we sit, we are a very literate population. But, you know, when I talk to some of the, you know, the think tanks in the UMP, you know, and I asked him about some of the apparent contradictions, and one of them came up with a very interesting story. He said,
just to explain, Reyes has never talked to me, right? And that's good. And that's right. Yeah.
And he said something very interesting. He said in 2002, we did the right thing. We stopped government recruitment, cut down public sector, freeze on recruitment, everything, and we got thrown out. So he said that, so if you're going to do the right thing and put the economy right, you must be there to do it. So therefore, they're saying that while we try and take the right direction, we need to also make sure that we are there, not get thrown out before, you know, somebody comes and reverses everything else that happened, which is what happened on the government freezing of public sector recruitment, completely reversed. And I won't get into, because I'm not an economist.
So fair enough. You're saying there are political considerations, that the old question we had in the first session, that makes unpalatable reform difficult.
So I think we need to, knowing the current context in Sri Lanka, we need to understand that while there is a move, I look at it looking at glass half full. Okay, if there's a right direction going, there may be a few which are not palatable.
Deshal was trying to do the same, and I was nasty to him.
Yeah. Which only thing I'm trying to understand the reasoning possibly why some of those apparent contradictions are happening. But coming back to the tax thing, I think the tax direction is right. It is a generally accepted principle that you should, the low tax rates will get you higher collection. But only one thing that I have always mentioned, see, I find that in quite a lot of the other countries, especially in the West, if you say you're not a taxpayer, they'll think you're a blackguard or an absolute rascal. In Sri Lanka, if you say you're not taxpayer, that's a big thing, you know. Everybody likes to say, oh, I don't have a tax file. So I think, you know, we need to change this concept. And that's why I told a particular part in the government, I said, run a campaign with the TV. It's a worthwhile investment. See, we asked for new airports, we asked for roads, we asked for facilities, we asked for fancy things. Surely somebody has got to pay for it. I mean, we want everything from the government. And by all means, I'm completely not apolitical. I don't care who it is. But I'm just saying that we also have to play our part. See, tax rates have come down. At 15% is the lowest tax rate in the world, for God's sake. You won't get lower than that. You got 2.4 million threshold, which means up to 200,000, you don't pay a cent. Come on, if people who can't, at these rates, if you can't pay your taxes, there's no hope for Sri Lanka. Believe me. I think there is a message that I think we also have to understand. We can't just fold our hands and say, okay, you do everything, you borrow, we'll end up like Greece, right? You go to Greece, you find a beautiful metros, everything. Nobody pays taxes, right? So you get more millionaires there per square foot than anywhere else, but they don't pay taxes. So I think we also have to get into a situation, look, there is a move in the right direction. Tax rates have been brought down. Corporate tax rates also come. Not 15%, come on, other than certain other sectors, other sector rates are 15%. Surely, if you can't pay 15% of 100 that you earn, right, then I think there is something absolutely wrong. So when we want the infrastructure, we want all the right things, we also have to learn to pay. So I think, personally, I believe the direction is right, but, you know, like somebody mentioned, we have done tax rates lower in the past. Nothing's happened. The collection hasn't gone up. I would think that there should be, coupled with the tax rates reduction, which is the right direction, there should be a process of education saying that we also have to play our part, that we must pay taxes. Paying your taxes is important. I like that concept that they have in India and Pakistan about filers and non-filers. So maybe we should couple these taxes that we have on withdrawal of cash with saying that if you file your tax return, then you get your credit. If you don't file a tax return, that's a tax you pay anyway. So that's one way to get. We did a research. We found that more than 85% of the taxes of this country are paid by 500,000 people, corporates and individuals. Only 500,000 are paying 80% of our tax bills. Revenue. I mean, this is not tenable, you know. So that is what I think. So personally, I believe the direction is right, but I think it has to be coupled with some education and campaign.
I'm going to stop you there and come back to Eteri, and then Dr. Nandalal also wants to come in. I'm going to give you all maybe a minute each here.
I think fundamental question.
Is this mic working? Yeah.
Fundamental question with the tax system here is a purpose. What for are you using tax system? Are you using it for incentivizing, or are you using it for collecting revenues? For 40 years, you have been using it for incentivizing. Effectively, every annual budget cycle is preceded with annual lobbying cycle or proposal collection cycle, let's put it this way. And then these new proposals are injected into the budget. So if you keep injecting every year, for 40 years, it accumulates and it reaches the satiation point that it simply could no longer generate revenues because you put so many incentives, exemptions, rate reductions into the tax system that it no longer works for collecting revenues. It works for incentivizing individual, business, sector, I don't know, professional, you name it. It's very hard to collect something when it's not designed for collection. It's designed for incentivizing. I think question that business community and leadership of this country has to ask, do we want to continue this way or we want to collect revenues? And that's a fundamental shift, the way you approach tax revenue collection. With all due respect, just reducing rates will not generate revenue. It will reduce revenue because reduction of rates may work if you are expanding your base. If you are removing all these holidays, exemptions, and you are bringing more people into the tax net by the law. They are obliged by the law to pay the tax. At this moment, it's not happening. It's just more rate reductions and more incentivizing. Why would anybody pay tax? I have special provision, I have special exemption, I have rate reduction. Why would I go and pay tax? It's carried as a badge of honor, as you said, not being paying taxes, because at some point you were important enough, so state gave you a free ride on the tax system. I think you reached the point that you could keep delaying this decision and keep borrowing. But there are certain limits to doing that. Implementing tax reform is extremely difficult because you need to bring your business community along with you because you cannot implement it in vacuum. People have to come along and have to buy into the system. And that's where you have to have decision as a public people, business, leadership, how you want to see your tax system. Do you want to collect revenues? If you want to collect revenues, you could collectively agree on, I don't know, 5, 6, 7 taxes with minimal number of exemptions and broad base that everybody pays and say, okay, let's be done with it and forget about it for 10 years. And that's it. No annual cycles of incentivizing.
Thank you, Eteri. Yeah, I'm going to stop you there. Dr. Nandalal, I'm coming to you, but I want to make sure we focus the question to you. I think the question that Reyes is raising and Eteri is raising, they're raising from two different places, that actually people are not paying taxes and taxes are not being collected. is there a problem in the administration of taxes, which is really a public sector functioning, an institutional and efficiency problem? And how can, why is the public sector not working in collecting taxes? What is the problem? Is it policy, or is it just the poor functioning of the public sector?
Both. On the tax collection, just one point I want to respond to Riyaz is that bringing down taxes and education will not bring taxes. For example, if you look at people more educated, if still you have loopholes, they will not pay taxes. So, as example is who are not paying taxes in Sri Lanka are the most educated people, doctors and lawyers. Why aren't they paying taxes? Because they see they can prevent. They cannot pay. They can basically go out of taxes. So that's basically why, if you look at the countries where tax systems have been very efficient, is that you have proper institutions and proper compliance and laws, and those can be implemented in a simple way. So, there's a nice article that I want to comment on the KPMG article on Sri Lanka has now become the lowest tax regimes in the world. If you look at the countries in the bottom part of that, are basically Singapore, Hong Kong, Ireland. Those countries are basically running fiscal balances or surpluses. Can a country like Sri Lanka, which has been running 30 years of fiscal deficits, highest fiscal deficits, can afford to have a lowest tax regime compared to even the similar rated countries, peer rated countries?
Nadila, is that something that happened just by this budget, or has it been happening in the last 5 years?
That has been happening throughout the period. And one reason is that, let me explain, the exemption is basically giving opportunity for people to misuse it and come into a different kind of tax way, even with laws. And other part is the implementation and the use of technology. So some other countries, why their taxes are low? Because they have either Middle East countries, they have royalties or oil incomes, or they have proper systems and institutions to collect those taxes. Whereas in our system, we have Revenue Department, Excise, and the customs, where customs can be easier to collect because it's at the point of exit or entry. And excise also very small areas. When it comes to VAT, the income taxes, you need to have a lot of technology, and you have capacity, skills, and efficient institutions. And that is, I think, one of the issues, but that's not the only issue. There are a lot of other issues in the tax laws and the way that, the compliance. If I haven't seen anyone has gone to jail without, not paying tax here. But if in the US, if you not pay taxes, you're jail.
Send them to jail.
Yeah. Thank you very much. I hope my mic is switched on. I don't hear myself enough. Etere, did you want a 30-second response? But I want to move on to another subject after that.
Yeah, I just wanted to agree with Nandala that it's a combination of issues. And your unpredictable, ambiguous, and relatively unfair tax legislation enables relatively ineffective administration. If you have clear rules and regulations and very little room for discretion, you are enabling effective administration.
Right.
But your legal framework is not designed to enable effective administration. So there has to be a sequencing of things. You need to incentivize effectiveness by providing clear rules, clear roles, and reducing room for discretion.
Thank you very much. I'm going to move on to a second subject. I think, Etere, you have set the agenda in many ways with your first talk. So you brought up fiscal consolidation at the beginning, but you also brought up the question of accountability, budget accountability. Who is responsible for creating these numbers? And who is responsible when the implementation differs significantly from what is given? Now, I listened to Dr. Nandala, and I got the feeling that the central bank doesn't feel it's responsible. Okay. Now that raises a question. Well, who is responsible? Dr. Nandala, would you like to comment from a government perspective? What department of government, which ministry, which institution should be held responsible for coming up with correct reasonable figures and policies on the budget. We know that, technically, just because I'm elected as a minister, I can't write a budget. That's a very complex task that requires skill and experience. And we have a whole public sector and public institutions dedicated to it. Who shall we hold responsible?
I think in the consultation process, I think we also involved in terms of giving our views and advice, inputs to the budget. And the implementation part, there are different agencies who are responsible for example, now if you take revenue, there are three key agencies. One is the Inland Revenue, then Customs, and the Excise Department, those three departments. And in the process of preparing those numbers, I think they, as Honorable Minister already mentioned, they said that they have done all the simulations and come up with all these estimates. Those are realistic. And if they can't deliver these numbers, then there will be actions taken against those officers also. That's that's one thing this finance minister has clearly mentioned. You are the responsible agency, you have to deliver this. The responsibility is given. In fact, my concern is if I don't know who prepared those numbers, whether those numbers have been overestimated or ambitious, that I don't know. But by looking at the numbers, and if I don't want to be a person who is responsible for bringing these revenue numbers at all, I know by looking at the numbers, and that's why I said I have some sympathy towards these officers who will be held responsible for delivering or collecting these taxes. One can do a technical simulation exercise. If this thing is to this level, then you will get this number of revenues. But one has to look at in a holistic picture where, so if you increase taxes, what will happen to the other activities? There's a whole economy is interconnected. So if one sector taxes are higher, then economic activity would be lower. That's kind of a tightening the situation. Then
Dr. Nadal,
one will have to look at the overall situation.
I'm going to come in because your 2 minutes are up, but I'm going to keep the question with you. Eteri pointed out that for lot of the expenditures and policies set out in the budget, there is no calculation of what the cost is going to be. That is very difficult to make it make sense. So are these calculations being made somewhere in government and kept secret? Or does government also not know what the costs are going to be for the policies in the budget?
No, I give one example. So, for example, now import duties, there's an estimate, what I understand, what they have calculated, the total revenue, about 40 or 45% coming from the import duties. So, on the assumption that next year also imports would be to US dollar some amount. So, that is a highly, unreliable number for anyone to forecast what would be the next year imports expenditure total. There are several other factors. You have exchange rate policy, you have the global factors, you have domestic economic growing going on, to have this, you have investment coming in. So several other factors. When you ask revenue agency to estimate the import duty collection, they simply look at this year number and extrapolate, and they see, okay, this is
so
import
what you're
duty.
saying is the competence of these estimates within government are very weak. Because the politician is saying, give me the estimates. They're being given estimates that you yourself, on your assessment, feel are very poorly done.
No,
we have government
I
agencies
certainly can't say
delivering-
this is one example.
Yeah.
And as I understand how imported collection have been estimated, so there are a lot of risk factors in that. Then you do have alternative flexible policies to address if there's a risk to that number. Then what would be the alternative position, or whether contingency, or whether there's a kind of flexible rule? For example, now in some countries, there are clear fiscal rules by law. If you don't get this kind of revenue, there will be automatic adjustment to the expenditures as well. So then you kept the fiscal rule is to keep the budget deficit or revenue at this point at any cost. So then it's very clear. So there's a flexibility on the both sides. Whereas here, there's less flexibility on the expenditure side, and you have ambitious revenue targets. Then if they can't deliver that thing, then you end up with a high deficit. So I mean, there are a lot of risk factors in all this. I mean, it's very difficult for anyone to make a projection of the economy on all the sectors, and that's a very challenging task. So you can rely on that kind of projection to make very concrete and strong proposals for the year or in next
Deshal,
years.
I'm going to bring you into the conversation because now there's a real puzzle here. There is a sense that clearly there has to be some professionalism in the construction of budget projections, budget numbers, and we are hearing different things. On one hand, Dr. Nandalal is saying us that the finance minister has made it very clear that the bureaucracy is responsible. On the other hand, I think as a professional central banker, he's also very clear that he doesn't have much faith in what has come out. Where do we place accountability and responsibility, and why is it so elusive?
So I think one of the issues is what Dr. mentioned.
Is Mike, yeah.
Was mentioned as well. I think there are a lot of different voices that come in. So I think the initial projections probably come up from the departments that are responsible. But after there's a lot of patchwork going on where different people, different entities will want different interests, and then it's I think at that point it's very difficult to say the original projection is the responsibility of so and so. So I think what is important is to whilst the issue of consultation is important, the issue of getting different views is important, I think it needs to eventually go down to the Department of Budgeting within the Treasury that needs to have this the final say. And so accountability needs to be matched with actual work. The person who does that thing has to be held accountable as well. It's unfair to hold somebody accountable for something which he has very limited say into doing. So I think those two have to match. But if you're looking at it, there is actually a Department of Budgeting within the Treasury. That seems like the logical
place where accountability should rest. Eteri, if you can come in on that, yeah.
If I may comment on that, since we have counterparts in Central Bank, in Ministry of Finance, including in those budget offices with whom we work closely, I could say that there is no lack of professionalism per se. People are experienced, people could do good estimates, they understand some of the risks of the estimates that they're producing. I think where issue is, and it's incentive. Like, is somebody checking at cabinet level, at parliament level, consistency and coherence of these main policy decisions? Sometimes we have the feeling that we are only people verifying how budget has been implementing and asking why it's not 4.4% and why it's 5.9% or why it's 6%. And that should be a departure point, that when cabinet presents a budget to the parliament for implementation, cabinet should also take responsibility around checking quarterly implementation and have discussions quarterly how this budget implementation is going. And maybe there should be also parliamentary oversight, presenting quarterly or semi-annual reports or annual reports, where actually you monitor how implementation went from quarter to quarter. And if you see there is significant deviation, then you have this discussion within the policy-making circle, how to correct it. Then you give a fair incentive to your professional cadre to be responsible to give you realistic estimates. If nobody ever checks their work, why, okay, politicians have ambitions and they're producing ambitious estimates. And that's the incentive structure that is, I'm not saying necessarily this year or past year, that's how incentive structure around budget implementation and monitoring is designed. So putting this responsibility on mid-level professionals, I don't think it's fair, because it's not that they are not professional enough. It may be that they are not asked enough questions.
Thank you very much, Eteri. That's a very good, I think, pushback on my attempt to put the public sector in bad light. Okay, thank you for doing that. Let me just read a few questions. I've taken questions from the audience. There's a question that says, is it possible to know the views of the panel on how much depreciation of the rupee is required in 2016 and also increase in interest rate? Ideally, if you assume it's a mix of both, we'll need then to know how much of each. Now, my response to the person who asked the question is, talk to Reyes. He's already advised you about trying to get something for nothing. Amal's your man. Pay him and hire him. He will help you later on. Okay, so moving on. Reyes, there is a question being raised to you about taxes. That is that, isn't the indirect taxes so high that, why are you complaining about these direct taxes being so low when indirect taxes are so high? Aren't they compensated? The government reduced it from 4 bands to 3 bands. It seems to be that they actually increased the taxes on the larger number of items and reduced it on smaller number of items, effectively on their own projections showing a higher trade tax. So should people feel like I'm already paying taxes every time I eat and drink, why should I pay from my income as well?
I'm referring to the Prime Minister's statement about rebalancing the taxes.
Right.
Indirect taxes are easy to collect.
Yeah.
But I think it's not fair to burden everybody with a tax burden when I think the people who can pay should pay. Yeah. So I think that the Prime Minister's statement about rebalancing the direct, indirect taxes, I think is a right way to go. I'm a firm believer in making the tax system simple, because the more complicated the system, the more people will find loopholes around it. The problem lies in the implementation, administration, tax administration. I think that's where a lot of our weakness. I saw a question here saying how the overnight transformation on the roads with the lane traffic. Honestly, yesterday I drove and I found that it was much better because people are scared that they'll have to go to courts. Mm-hmm. So I think if there is a very uniform administration, and I think the RAMIS that is coming into effect from 1st January 2016, if properly implemented, can help. I think what we should have is, I think we have a simple tax system now. We need to rebalance get more direct taxes coming in. And the way to do that collection is, I think, very tight implementation. I think RAMIS with some very consistent implementation might help.
Yeah. So I think we've taken a lot of the questions from the floor, and our time is almost up. Amal, am I being unfair if I ask you to kind of give the closing words, because everybody else has had more opportunity to speak? But if you can summarize your reactions to the fiscal consolidation, accountability, and public administration, all three things that are not necessarily the response of business, but really that matter for business a great deal if business is to succeed. But also, I think you have to respond to Reyes's question, is business part of the problem? By trying to avoid the paying of taxes, is business actually creating the kind of government that ultimately undermines business, or the kind of fiscal situation? And is there a reason for business associations to also do a groupthink about how we are becoming a part of good governance, not just asking for it? Yeah, and you will be the last speaker, and we will close from there.
Okay, give me a relatively harder task at the end. Just one small thing about this accountability for numbers. Something I want to point out. We talk about the projections and accountability. Next year's projections. This year I sound and the problem that you alluded in your first presentation, showing the long-term projections, how they don't work out. But I have a fear that somewhere down the line, we don't even know what we're working with right now. Because I'll give you an illustration that will put everything else into context. 2 weeks before the budget, the finance minister said the budget deficit is going to be 6.9% for 2015. 11 months of the year gone, 10, 11 months of the year gone. Shocked a lot of us because it was more than we expected. With the budget, there were 2 documents released by the Treasury, Fiscal Responsibility Act report and the budget document itself. One said 2015, this year, number was 5.6%, other one said 6%. So within 2 weeks, 6.9, 5.6, 6% for this year, not about projections. So I don't know how that happens. But we have some problem here. I don't know how to deal with that problem. On the question of business, and I think that's important. So there are 2 levels to this. One is a business that deliberately does not pay what they're supposed to pay. Okay, that's criminal. that should be, and I think, and pays off people that don't pay. I mean, it's a moral, it's a criminal action. I mean, just like corruption in Sri Lanka, it is, I don't know, I mean, I get very, very angry about that. Let's put it that way, very simple as that. We have I mean, that is a reason for poverty in this country. You know, you want to know why our maids are in Saudi Arabia getting treated why they are? That is because the country's tax system is not there to give a proper social security net. These are things that, you know, there are results of that. So that is the one aspect of business deliberately not paying what they're supposed to pay, criminal actions, I call it. The second action is what you talked about, a culture that we have that in the budget or something else, you expect government to tell you which sectors are good. You know, or even, I mean, that's a kind of belief that economists can tell you which sectors are good and bad to invest in. Even in a budget presentation, or, you know, this sector, this is what they got. This sector, this is the Christmas list. This sector, this is what they got. I mean, that is what a budget presentation is. So, you know, you get, business should basically, unless it's a sin sector, you know, cigarettes or something, gambling, you want to tax and say, look, you don't want to do this. I don't think it's a business of the government economists to tell business which they should be. There should be one rate and business figures out what is good, where it is good. It shouldn't be bureaucrats or anyone else, but business has also got used to this over time, that the government should say what is a good idea and in that process lobby. Tourism is a great sector. You know, it probably is a good sector, but let the markets decide that. And that is the other source of, so it's a mindset that taxes are, like you said, I mean, I totally agree. It's a revenue collection. It's not a, you know, trying to figure out whether tourism is good or agriculture is good or whatever. That, let the market figure that out for itself. Simple as that. So I hope I could give some perspective.
Thank you very much. I think our time is up, and Lakshman is going to stop me if I don't stop. Eteri, Amal, Deshal, Dr. Nandalal, Reyes, thank you very much for all your contributions. Yes.
So what we try to achieve through this panel discussion is to give you an overview, give you, a discussion, provide you with a discussion on the budget and the Prime Minister's policy statement. So hoping that taking this Prime Minister's policy decision as a kind of a future direction for the economy and the country. So that is why we took it seriously. Somebody, of course, told me, Lakshman, don't even bother about it because they themselves don't take it seriously. But anyway, we took it seriously because we wanted to have, some kind of guidance for this country economy. So we thought that this is a statement that would provide. So hopefully you got some ideas and what is the implication on your own business and your own work. So we are taking a break. We'll be back sharp at 4 o'clock for the final session, Business Leader Roundtable. Thank you so much. And once again, put your hands together and thank us.
LBR LBO Debrief, Business Climate Outlook of 2016. Sponsors. Have an app idea, but zero programming experience? Well, you have come to the right place. There is a mobile movement going on. Smartphones are always on, always with us, and always connected. In this day and age, having a mobile app for your business will be advantageous as it will cultivate customer loyalty, improve your brand, and make you stand out from your competitor. With experience in the industry for 15 years and having catered to many different clients, from startups to large corporates, you are in the hands of experts. Contact us for a free consultation. eFutures. We don't just build a mobile app, we build a business. PR partner.